Well, let's quickly take you through the events that you need to keep an eye out for in the global markets. We have the US industrial production data and the Eurozone CPI inflation number that's likely to come out. We will be keeping an eye out for that. And back home, we have board meetings for BEL. They will be meeting up to consider an interim dividend for FY23. And we have GMR Airport's board meeting for raising of funds through issuance of eligible securities through qualified institutions placement and foreign currency convertible bonds. Also, we have the 11th edition of a Delhi Literature Festival that will begin today. We have the EU Chamber of Commerce, India, that will be hosting the Education Summit, and we have the budget session of Delhi Assembly that will kickstart today. And finally, we have the ICCR that will be holding a meet on international relations on the 17th and the 18th of March. And with that, I'll quickly mark the SGX Nifty as well. It's up 107 points as of now. Even the US futures are in the red. They're largely flat, but SGX Nifty up a good 107 points as of now.
Absolutely, Ankita. Surely SGX Nifty indicating a positive start as of now for the markets as well. Let's move on and just talk about what is the rescue plan coming in terms of the First Republic Bank. And now the biggest US lenders swoop in to rescue this cash-strapped First Republic Bank with $30 billion cash. Now JP Morgan, Citigroup, Bank of America, Wells Fargo are making a total of $5 billion worth uninsured deposits into the First Republic. Morgan Stanley and Goldman Sachs are injecting $2.5 billion each, while the others are contributing $1 billion each.
And meanwhile, the job market in US remains robust despite the turmoil in the financial markets. Weekly jobless claims fell by 20,000 over the week to reach 1,92,000. Economists polled by Reuters had forecast 2,05,000 claims for the latest week.
And staying with more news from the United States, Treasury Secretary Janet Yellen warns of failure to raise debt limits, saying it would be devastating for the banks after the SVB turmoil. Says that the banking system is sound even after in the aftermath of the crisis, but market rattling debt standoff could change that, and proposes a plan to prioritize debt obligations, calling it dangerous idea that would technically cause the US to default on its bonds.
And the European Central Bank, in its latest monetary policy decision, has hiked interest rates by 50 basis points, in line with the expectations. The main refinancing rate now stands at 3.5%, while the marginal lending facility rate has also been raised to 3.7%. The European Central Bank has also made note that inflation is projected to remain too high for too long, and has gone on to reiterate the euro area banking sector is resilient. Listen in.
Inflation is projected to remain too high for too long. Therefore, the Governing Council today decided to increase the three key ECB interest rates by 50 basis points, in line with our determination to ensure the timely return of inflation to our 2% medium-term target. The euro area banking sector is resilient, with strong capital and liquidity positions. In any case, our policy toolkit is fully equipped to provide liquidity support to the euro area financial system if needed, and to preserve the smooth transmission of monetary policy.
Prior to the events of the last week, around 150 basis points to go before it hit the terminal rate. So whereas the Fed could have quite comfortably today paused, and the Bank of England could have done the same, and Australia, New Zealand, others could have justified pausing at this stage, the ECB is probably one of the only central banks, if not the only central bank, that couldn't justify pausing its tightening cycle because of financial stability concerns, because of how much more work there is still to do on the inflation side. Then you've got to ask the question, what would be achieved? What could be achieved from pausing? Well, you could potentially allay some of those financial stability concerns, but then you also fuel the fears in the markets that something terrible is about to happen. The central bank knows more than we do.
Now, moving on, BuzzFeed has transferred cash from the cash-hit Silicon Valley Bank to other financial institutions. Now, this comes days after the digital media firm stock slumped on the news of its exposure to the troubled bank. The company's stock was over 4% lower in the aftermarket trading yesterday. And now remember, the company's decision is to move its money comes despite the FDIC having guaranteed all depositors of the SVB access to their money.
And UK, following a similar decision taken by the US, Canada, Belgium and the European Commission, is also banning TikTok from government devices over security concerns. According to the UK Chancellor, the app is known to extract user data outside the app itself, which is the source of concern for many Western nations.
And after the much-awaited launch of China's Baidu unveils its AI-powered chatbot, Erin Bot, and this comes after Google, Microsoft stepped up the AI game. But it has disappointed the investors due to its use of pre-recorded videos and lack of public launch, which eventually led to the fall in the share price.